Good evening and welcome to a brand new show of Markets Tomorrow. I'm Nikunj Dalmia.
Good evening, everyone. I'm Avan Dabash. Let's start off by telling you who will be joining in over the next half hour on the show. Amit Bhartiya, partner at GMO, will be with us. We've also got Ashwini Gujral, fund manager at ashwinigujral.com, and Sudeep Bandyopadhyay, managing director and CEO at Testimony Securities.
A look at Indian markets, and the first trading day of the week after a long weekend is in the books, and it was a blockbuster day. Nifty appreciated by nearly 4% plus. We've closed just a shade below 5,900 on the Nifty. For exactly a week ago, this number looked like a laughable number, but now the print is there on your screen. It was a day of all-round strength for all major indices. All major sectors have closed with a positive bias. Auto clearly was the big story of the day. The auto index today has touched a fresh high for this calendar year 2013. There was sizable price action in all the FI-dominated stocks, Tata Motors, ITC, Infosys, and there was price action in HDFC. Banks, they're still lacking the rally. There was some selling in PSU banks. IndusInd Bank also reversed from the day's high, but ITC contributed nearly 34 points to the Nifty. So a great day, a strong day, and a very refreshing day as far as bulls are concerned.
Absolutely, it was, and it took everyone by surprise, the kind of stupendous rally that you witnessed for the frontliners. For the broader markets, though, they continue to lag the frontline momentum. So yes, we did see a notch up, but nothing to really shout home about. The advanced decline ratio has remained healthy, and the Nifty Junior, that did see good momentum, so up by something like 3% to end of the day's high. But if you compare the movement in the last 4 days for the Nifty, which has gained something like 9%, for the broader markets, it hasn't been quite as enthused. The mid-cap index has gained something like 4.7% in the last 4 days, and for the small-cap end of the market, it's been a gain of just about 4%. For today, MNC stocks really took everyone's breath away as the RBI has made it easier for NRIs to increase their stake in domestic companies via the FDI route. So the likes of ABB, Alstom, you had Heidel Cement, as well as Siemens were up and about. Apart from that, you had JP Power on account of the fact that reports suggest that an Abu Dhabi-based company is the frontrunner to acquire the hydropower projects in Himachal Pradesh, and GMR Infra on account of M. Nasheed winning the first round of the Maldives presidential election. Nikunj, of course, you did see a great rally. A lot of factors seem to be working in our favor. The movement of the currency, the fact that perhaps the US may postpone the Syria attacks. But is this rally here to stay?
Avan, you cannot brush away the pace of the rally. It's a spectacular recovery. 550 points plus for the Nifty. Nifty is up about 6% in a matter of just 4 days. So the pace of the rally stroke recovery is quite breathtaking. But locally or fundamentally, I think nothing has changed. However, what has changed is the utter bearishness for emerging markets. Emerging markets are no longer feeling seasick. All emerging markets and all emerging market currencies, they managed to bounce back by about 2 to 4%. Indian markets, so India is a high beta market. Since we had fallen the most, we also have recovered the most. There was very little fundamental bend to today's market action, and I'll give you a clear example here. On a day when rupee has appreciated, if Infosys has added about 140 rupees, that just tells you that there is nothing correlation, or there is no correlation about today's price action. So I think in the near term, we are completely hostage to global cues, we are completely hostage to flows, and it's very difficult to pinpoint what will happen to flows ahead of the Fed event. The problem here, Avan, is that the pace of the market activity is very sharp. So first we cracked in a climatic manner, then we recovered in a spectacular manner. If you're on the wrong side of the trade, you're getting completely cleaned out. It's a shallow market, and it's a pace which I think is very unnerving.
Let's find out what our experts also make of this kind of a pace in the market momentum. Ashwini, we'll start off with you. Would you be using this kind of a rally that we've seen to now sell?
If you mean book profits, I think we are getting to that point. Probably keep a trailing stop at about 57.50 and see how far we can go with this. I think 59.50, 6,000, somewhere around there we should find some resistance, but it will take something to make this rally peak out. It's likely that we'll first go into a range bound mode before the market loses all its strength. So chances are that once both these events are over is when we'll probably be topping out. So far the momentum continues. Just keep trailing it with a stop and get the most out of it. I think 5750 is that point right now.
Sudeep, fundamentally or locally, nothing has changed in last 1 week, but what has changed is the Nifty number from sub 5400 to sub 5900.
I agree with you, Nikunj, but I'll tell you one major difference which has happened locally as well. You know, as a market participant, I can tell you very clearly that now I know there is a central bank team, the central bank governor, who will be proactive and will not be reactive. And that's a huge, huge change from the point of view of the financial markets. You see, all this momentum and all the mood change happened post the RBI governor taking charge and announcing a whole lot of measures. You know, all these measures taken out individually are small measures, may not add to a huge positive, but the intent was made very clear that, you know, so far and not anymore. I think that sent a strong message to the market. Of course, as you mentioned, the global cues helped too. And, you know, by no means I would say the fact that the message which went out from the RBI, that currency depreciation, probably we have seen the end of it, that probably is propelling a lot of FIIs who are sitting on the sideline wanting to invest in, you know, good stocks in India coming back now. For them, you know, they were buying in ITC and they